Good evening. My name is Ryan. Welcome to the channel. Now, it's a pleasure always to give these presentations. Now, tonight's presentation, a very important topic and a tool every trader and every investor should know about going forward, especially if you want to be able to stay on the right side of the market and be able to play various roles in the market, such as hedging the market, right? Such as getting exposure to certain entities that traditional investing styles may not have been able to unlock. And what I'm talking about tonight, ETFs, and the presentation is going to be on the trends, essentials, and opportunities, everything you need to know about ETFs going forward. So if this is something that you're interested in, stick around and let's get started. No invention has been more disruptive to the asset management industry in the last quarter century than the exchange traded fund. The best place to start off is what is an ETF? An exchange traded fund, otherwise known as an ETF, is an investment fund that holds multiple underlying assets and can be bought and sold on an exchange, much like an individual stock. ETFs can be structured to track anything from the price of a commodity to a large and diverse collection of stocks. Think about that word alone, commodity, right? A lot of investors want to get exposure to gold and other critical and rare earth metals in 2025. A lot of opportunities presenting themselves. And this just being one example why ETFs need to be on your radar. Why are ETFs exploding in popularity? ETFs, exchange traded funds, eliminate single stock risk like mutual funds do, but can be traded like stocks on an exchange. In addition, ETFs provide an amazing range of flexibility and convenience, from matching the performance of indexes to international investing to commodity and currency trading to selling short without margin. That last part there, selling short without margin, that's where the hedging capabilities come into play when it comes to ETFs and give the individual investor the ability to play both sides of the market. And I'll go into more detail later in this presentation. Now, everybody's trying to save money, so no surprise, lower costs. Many have minimal fees, providing a financial advantage for investors, especially when it comes to traditional mutual funds. However, just giving the ability for investors and traders for greater market flexibility, ETFs allow for easy trading and access to various investment opportunities, making them a versatile choice for investors. There are also bear/inverse funds that help take the guesswork out of shorting stocks. Now, in the basic sense, ETFs can be broken down in two categories. The first, passive ETFs. From these choices below, the S&P 500, the NASDAQ 100. Now, these ETFs, instead of trying to outperform these benchmarks, they are simply made to track and go along with the performance of these benchmarks. So whether you want to go along with the market when it comes to the S&P 500, the Dow Jones, the NASDAQ, or some of these other entities listed, ETFs give you the ability to do so. The second category of ETFs are active. You can see some of the examples here with the Fidelity Total Bond ETF, or even JEPI, the JP Morgan Equity Premium Income. Now, these entities listed are in essence to outperform the market, industry, sector, or underlying entity in which it tracks. So whether you're looking for income strategies through JEPI or a little bit more excitement through something such as Cathie Wood's ARK Innovation Fund, these type of ETFs give you exposure to active fund managers trying to outperform certain benchmarks. A leverage ETF is an exchange traded fund that uses debt or financial derivatives as leverage to amplify the returns of a benchmark index, such as the S&P 500. Leverage ETFs can produce significant short-term gains, such as 2 times or 3 times the performance of their benchmark. But investors should note that the short-term losses can also be amplified. So just as these ETFs can work 2 or 3 times in our favor, they can also go against us 2 or 3 times as fast. So now let's jump in the VectorVest 7 software to get you a much better visual representation of the information I've been covering so far. Now we're in the VectorVest 7 software and taking a look at 3 ETFs. Again, we have the underlying QQQ. This is the NASDAQ 100, right? So if you want to play the market to the upside, this is an ETF you would particularly have interest in, especially if you like tech stocks, right? This is the NASDAQ 100. Now, we also have QLD and TQQQ. Now, remember on the slide before, I was talking about 2 times to 3 times as leverage. So as an example, I'm using the performance chart right behind me. Now, this performance, all the ETFs performance will start at 0, and this is looking over the last 3 months. You can see with the swings in the NASDAQ 100 in the beginning of this chart here, those amplified ETFs giving us a little bit better exposure for the bulls, but in addition, increasing some risk to the downside as well. So that's why I want you to be careful when it comes to these leveraged ETFs. Now, we did have a big run at the beginning of September. You can see as the NASDAQ 100 grew in price, coming in just shy of 10% here. At that same time span, if we look at the QLD, utilizing a date line here, came in just over 15% during the same time span. But if you look at the TQQQ, giving investors, especially the bulls, a lot of great exposure to when the market has a good run. However, when that market loses momentum, look at the drop in the triple leverage along with the double leverage. That's why these are more for swing trades and more for active traders rather than just a simple buy and hold strategy that one might try to do with the QQQ. However, important leverage ETF characteristics you should know: high fees. You could see that typically when these ETFs start losing momentum if the market starts shifting direction. That's why it's typically intended for shorter trade durations. Compounding greatly impacts returns, magnified returns in up and down markets. Highly volatile and popular among active traders. The reason why it's so popular, you can make more money in a shorter period of time. Again, ETFs being such a powerful tool to put in your arsenal when it comes to trading and investing. Not only can you leverage your positions or your bet essentially on an underlying entity, but in addition to that, these ETFs can give you the ability to play both sides of the trend. As you can see here, some popular 2 times ETF pairs. In the up markets, we have the SSO representing the S&P 500, or the QLD, which we just looked at, taking a look at the NASDAQ 100. But tonight's presentation, we're just going to stick to the SSO and compare it to the SDS. So whether you want to play to the upside or the downside in the S&P 500, these ETFs give you that ability. So for this example, I'm using a side-by-side chart. I've got the SSO. Again, that's a bullish ETF on the S&P 500, right? So when you're hearing good things, about the market, whether it's on the homepage on the VectorVest 7 software, seeing green lights, or maybe good news, seeing the Dow Jones or the major indexes continue to rise, that's when it would be appropriate to own this type of ETF. You want to consider market timing. We'll get to that in just a moment. And the other item here I have is SDS. This is the bearish ETF, right? If you want to hedge your portfolio from downside risk or market volatility, not a bad ETF to consider. Again, these are leveraged 2 times. So breaking this down, you can see the market rising here, the SSO clearly moving in the right direction, but when the S&P 500 starts to roll over, look at the performance of SDS, giving you an opportunity to make money in a down market. Now, the VectorVest 7 software makes it even easier utilizing our market timing signals. If I click down below and just check off confirm calls on both of these charts here, you can see the confirmed down call was given, giving our subscribers ample opportunity to take advantage of an ETF such as a Contra being SDS. Look at the price performance here. It went from about $20 to around $28. Plenty of opportunities to make money in bearish market conditions. But in addition to that, when the market starts to correct itself, look at our proprietary market timing indicators, putting you back on the right side of the trend and getting you ready to get back into a bullish ETF such as SSO. Again, tracking the S&P 500. Not saying you have to use these 2 entities, but just as an example to show you the difference between a bullish ETF or regular ETF compared to an inverse or otherwise known as a contra ETF. This one being bullish, regular ETF, SDS being our bearish contra or inverse ETF. Now, if you really like to gamble, we can even amp this up. Here are some popular 3 times ETF pairs. We do have some that can play up and down markets. Now, these entities here go a little bit into other directions. We do have the TQQ looking at the NASDAQ 100, but tonight's presentation, we're going to break down SOXL and SOXS. These ETFs give you exposure to the semiconductors. That's been a hot space over the last few years, so I figured it'd be a great example for tonight's presentation. Here I've got the 2 charts up. SOXL, this is the bullish ETF on semiconductors, triple leverage again. On this side, we've got our bearish ETF, SOXS. Now, I already left the market timing signals up. We know at the beginning of this year, market volatility ticked up, the tariff turmoil. Hey, if you wanted to hedge some of your semiconductor positions or just play to the downside of the market, generally speaking, I mean, price action of SOXL taking a hit, right? Not any opportunities when it comes to being bullish with this semiconductor ETF. However, ETFs give you the ability to play both sides, right? So we take a look at the same time frame during that confirmed down signal, during that market volatility. Look at the performance of this, giving you great opportunities to make money in both up and down market conditions. I mean, price action was around $20 roughly, hitting a high just over $50. A lot of opportunities played to the downside of semiconductors earlier this year. However, over the last few months, really since May, we've had a predominance of confirmed up signals given. And look at SOXL getting you in just under $20, and now price action coming in around $41. But again, these leverage ETFs are meant for shorter duration trade periods and not buy and hold strategies. Now, before considering some of these ETFs, I want to share with you common investor ETF mistakes. For one, buys the wrong fund based on a confusion of the company name or ticker. Fails to research ETF components and risks, selects concentrated instead of a diversified fund. Now we have single stock ETFs on the rise, such as AMD and NVIDIA. So again, if you want more diversification rather than concentration on single stock ETFs, make sure you do your research. On top of that, we got buys highly volatile funds. For example, the Yield Max ETFs. Do your research before entering those type of ETFs. And the last item here, never use stops or defensive tactics. Just like any stock you buy, you should have a plan in place before you buy it and make sure you stick to the stops and not rely on your emotions. Now I'm going to show you how easy it is to make money with ETFs utilizing the VectorVest 7 system. Consider using the bullish ETF search in up markets. Now here we're on the Unisearch part of the program. Over on the left-hand side, there's a folder titled ETFs. I selected the ETFs pairs bullish search. So this is ideally for bullish market conditions. Now I did run the search as of April 23rd. So I'm going to pair this with our DEW market timing signal. We saw the success of our other timing signal, the confirmed call. So I want to give some exposure to one of my favorite market timing signals, being the DEW. And just look at the performance there. 9 winners, only 1 loser utilizing these ETFs coupled with our DEW market timing signal. And look at the results, 26% to the upside, while the VectorVest Composite at the same time only gathered 14%. So these stocks collectively outperforming the broad market. When it comes to bearish ETFs, simply come back to Unisearch, and right above the ETF pairs bullish search, there's the ETF pairs bearish search. So this would be ideal in bearish market conditions. I did change the date to February 21st. This was in accordance to a DEW down signal. Again, you want the sales of the market behind these trades here. And these are the stocks that would have showed up in this search at this time. So let's take a look at the results. Now, just looking at this time frame here from February 21st to April 23rd, again, 9 winners, only 1 loser. This time up 12% on average. So this gave you the ability to hedge the market. Look at the VectorVest Composite down below. The broad market down about 7% during the same time period. So the power of these ETFs is tremendous, giving the ability to the investor to play both sides of the market. All right, everybody. Hope you enjoyed tonight's presentation on ETFs, trends, essentials, and opportunities. I dived in quite a bit. There's still a lot more when it comes to ETFs, but I wanted to give you a strong foundation to work with so that way you can start utilizing these ETFs to enhance profits going forward in your portfolio. Now, if you enjoyed tonight's presentation, make sure you hit that like button. If you're new to the channel, hit the subscribe button, and I'll see you guys tomorrow evening.